Hi there, just some thoughts on renovations. If you're considering renovating, I did a huge one last year and I've been watching a lot of neighbors in my area do them as well, and just some little tips on that. If you're dealing with contractors, make sure that you're dealing with people who are going to get the necessary permits for your home. Also make sure that your pricing for all the work is written down along with the contract terms. If people are skipping out on the details of paperwork and taxes, they may be inclined to do that with your renos. While it's very tempting to save some money on the price, the terms can change radically if nothing's written. Also, if a building inspector should happen to come down by your house and put a stop work order on it, it's going to extend the time of your renovation, it's going to increase your costs, and there's a very good possibility that you're going to receive a fine for that. In some cases, you do have to demolish your work and have it done again. Recently, a neighbor of mine went ahead without a permit. They came by, they put a stop work order, and when work finally resumed 3 months later, some of the work had to be ripped down and redone completely over again. So that really increases the cost. Just to know, you, the homeowner, are legally responsible for the property and for obtaining the permits. It's not the tradesperson, so you will get the fine. And if your tradesperson also hires sub-trades, so if you hire a fellow to do your carpentry and they hire a roofer and they pay them, then it's possible that if they don't pay them, your home can get liens. So you have to protect yourself for this. Also, as a realtor, I have to tell you that a very bad reno job can really affect the price of your home. Good luck with your renovations. If you need any advice or ideas, give me a call. I've done a lot of renovating and building over the last 30 years. 647-886-1550 is my cell. Good day. Hi there, it's Ariel here again, and as you know, I'm also a mortgage broker, and I keep hearing concerns about interest rates. So are interest rates about to rise radically, and is the sky about to fall? The banks would like you to think that interest rates are going to rise radically because they want you to lock in now. You have to understand that banks do not make money on mortgages that read prime minus 0.70 or prime minus 0.50. So there's also a fear out there that, fueled by them, that if you don't lock in now to a long-term rate, you're going to be stuck. Well, that's just not so. Since all of this has gone on in the last little while, rates actually have been dropping again. So we don't feel that short variable rates are going anywhere, at least for a few reasons, and some of these are the following. First of all, the central bank has a reason for raising rates, and that's to control inflation. Our inflation was a little under 1% as of July 23rd, which is well below the central bank's upper limit of 2%, and that's measured by the Consumer Price Index. So until they see inflation rising, there isn't really a reason to have to raise rates. The effect of rates also, it's felt over time. Usually you don't see rates jumping radically in a short term. They raise the rates gradually, and then they watch to see what's the impact on the economy of raising rates before they raise them further. Okay, so nothing happens all at once. There's no need to fear it's all going to happen all at once, that you can't lock in. The real estate market's finally cooling off, and one of the bank's big concerns and the government's big concerns has been about leaving its overnight rate at emergency low levels that would fuel a housing bubble. And this just has not happened in Canada. In fact, the market has definitely slowed down. So again, another reason not to be raising rates. The Canadian economy is it's recovering nicely, which is very different from many other parts of the world which are not faring so well. So the central bank has also acknowledged that if they suddenly were to raise interest rates, that could stifle our momentum. The U.S. the Fed in the U.S. isn't expected to increase its short-term policy rates until 2012 at the earliest. And if we keep raising rates independent of the Feds, then our dollars will keep increasing, thus slowing our exports in our economy. So our dollar's going to rise next to the American dollar, and therefore our exports will go down, and it will also change tourism and slow things down. Okay. Now, the popular belief out there is that somehow that if rates are higher, that's going to hammer our real estate market. Okay. History does not bear that out. I've been in this business since 1977, and historically we can see that rates and house prices generally rise together. And rising rates generally occur in improved economies, and the positive economic momentum accompanying the higher rates creates an effect that is generally more positive than negative. Okay. For most of my real estate and mortgage career, interest rates were higher than 10%, and it didn't slow markets at all, and it didn't destroy prices. Also, in Canada, job creation has outpaced any of the forecasts, and that's another key factor in our economic recovery. Believe me, having jobs so that people can afford to pay their bills and therefore ultimately afford their mortgage is far more important to our real estate market than the direction of interest rates. So don't be afraid of short-term rates, and do not fear variable rates for the next period of time, and we will let you know when it's time to do something different. Have a great weekend.